What's up, everyone? My name is Ale. Welcome back to my world of stocks, and welcome back to the channel's series called Stocks That My Viewers Want Me to Review, where I basically pick a stock that you guys want me to analyze. I give you a quick review of it and I share my thoughts on it. Basically tell you if I would consider buying that stock myself. Now, this is our 6th episode so far, and I'll leave you a link down in the description to the full playlist in case you want to see past episodes. But this time we have a comment coming here from Charles Miller, who left a comment back in our previous episode where we reviewed Snowflake stock. But this is what he had to say. He said, great video, Ale. I agree with you. I would not buy Snowflake at this time. Like you, I have the larger companies like Nvidia, Google, Microsoft, and Amazon. I think they are much safer and will be more profitable. When it comes to disruptive innovation, I have invested $5,000 in Exact Sciences Corp, ticker symbol EXAS. This is a stock Cathie Wood has invested $11.5 billion in. I have to admit, this is one of the factors that influenced my buying this stock. I would love to see you review this stock and get your opinion on it. Thanks, Ale. Okay, so first of all, you're welcome, Charles, and you always leave super nice and thoughtful and very thorough comments, so I'm happy to help out here. I really appreciate. These are the types of comments, by the way, that I like to choose, where someone actually gives me an explanation of why they want a certain stock reviewed and how they personally feel about it themselves too. So thank you for that comment, Charles. Now, having said that, this is a very interesting stock here. This is actually an innovative cancer screening company, and like Charles said, Cathie Wood is heavily invested in this one. However, I think that Charles might have made a little typo there, not a big deal, but he said that she has $11.5 billion invested in it, and I think that he meant to say 11.5 million shares, because I don't think Cathie Wood even has $1 billion in Exact Sciences. I think it's a little less than that, which I will show you a little later in the video. We'll dive into Cathie Wood and everything there. But she does have close to 11.5 million individual shares. So I think that's what Charles meant to say. But regardless, it's not a big deal. When we talk about stocks, sometimes our brains get fried. I know I mess up like that all the time. I say, dollars when I meant to say shares. I say billion when I meant to say million. So it's not a big deal at all. Either way, let's take a look at this company. We'll talk about the stock and the valuation, and we'll even look at why Cathie Wood is investing in it herself and talk about that. And of course, I'll give you my personal opinion on all of this, and I'll let you know if I plan to buy the stock myself anytime soon. So let's dive into it. Okay, so let me just give you a quick intro into the company and what they do. So Exact Sciences was founded in 1995 before going public on the stock market in 2001. But it really took many years, pretty much decades, until they commercially launched their products and grew out their portfolio, which was largely fueled by various smaller acquisitions as well as a ton of in-house research and development, which is why their financials and even the stock price have been so volatile over the years, and I'll show you that in just a second. But what we have today is really a much larger and more built out company now, with a full lineup of products and services that aim to fight cancer through the use of various proprietary testing methods that are many times faster, cheaper, and more convenient than traditional methods. This not only encourages more people to get tested, but it also results in much earlier detection, which we all know is absolutely critical to improving the success rate of treatment, for things like cancer. In fact, it's estimated that the survival rate is more than 3 times higher when the cancer is detected early before it has the chance to spread in the body. And financially speaking, this is a giant market that we're talking about, since most standard guidelines only recommend routine screening for just 4 cancer types, while 2/3 of all incident cancers have no recommended screening options at all, and most are therefore detected in late stages where survival rates dramatically decrease. Not to mention that many people still don't even have very good access to healthcare, let alone all the routine screening that might be recommended for certain age groups and especially different risk factors. And that's despite cancer being the second leading cause of death in the US, affecting close to 2 million new people every year, with over 600,000 people in total expected to unfortunately pass away from cancer every year. And again, that's just in the United States alone. Well, EXACT is trying to provide more access to testing by using non invasive methods like the one used in their flagship product called the Cologuard test, which screens for colorectal cancer in the convenience of your own home with a simple stool sample. But it doesn't stop there. EXACT also offers screenings for things like liver, prostate, breast, and even hereditary diagnostics to see what types of cancers you might be more prone to getting. They even launched a new test earlier this year that provides a comprehensive DNA and RNA analysis along with a complete molecular profile of the cancer cells, which doctors can then use to create more robust and customized treatment plans for the patient. But it's not even just what they're doing today. EXACT is also working on future products in their pipeline that could potentially be even more disruptive and innovative than what they've already done. The one that I personally find the most fascinating is their multi-cancer early detection test that, if successful in the future, may be able to screen for multiple different cancer types from just a single blood draw. Guys, that would be an absolute game changer because it would make it way easier and probably more, I would imagine much more affordable too, to just test more people for more diseases. And so the combination of all these things, like the disruptive innovation and the giant market size that, is only going to get bigger over time, well, that's finally led to some much needed financial success for the company. In fact, just their 3 flagship tests alone are already screening over 1 million people per quarter across 100 different countries worldwide, and they have now achieved a record high in sales with over 30% growth last quarter and are even expecting to reach positive free cash flow later this year, which is ahead of their previous target of 2024. That's huge, guys, because EXACT has been burning through cash like you wouldn't believe over the years. Sure, sales have been climbing by large rates, but profits have been negative by hundreds of millions of dollars every single year. So finally being able to turn the corner and turn this company into an actually profitable type of investment, worthy stock, that would be a very big accomplishment. However, all of this really means nothing if the stock price and the valuation is still too expensive at today's levels. So let's quickly cover the stock now, and then we'll touch on what Cathie Wood is doing with it herself and whether I would consider buying the stock myself too. Well, taking a look at the stock, it's been just as volatile as you would probably expect, with certain times seeing huge spikes and others seeing huge crashes. During the pandemic, for example, the stock skyrocketed thanks to pepperoni testing, but later crashed soon after when the economy deteriorated. Keep in mind, unprofitable companies like this are always more sensitive to the economy and rising interest rates, where investors want nothing to do with these type of companies that, are constantly burning through cash and have to raise more funds by usually selling more stock and thus diluting your shareholders. Still, the recent earnings results were positive enough to really lift up the stock by over 60% so far this year. And I'm going to go ahead and guess here that my friend Charles, who gave us today's video topic, is probably up significantly on his position. So congratulations to you, Charles. For someone like myself, though, that is still not invested in the stock, I have to admit that it's become a bit less attractive after the climb. Don't get me wrong, though, it's still down about half its value from the pandemic highs, but the valuation is a bit of a mixed bag. Of course, we can't value a stock like this with a PE ratio as they are still not profitable, but on a price to sales ratio basis, it's trading above 6, which is generally considered a bit high. You should keep in mind, though, that EXACT's own sector is always trading high based on sales anyway, currently above 4, which means EXACT is only about 50% more expensive than the sector. And the real determining factor long term will be how profitable they become, which I'm actually very optimistic about, as they have very good margins above 70%, and EPS is, that's gross margins by the way, and EPS is also expected to average close to 100% growth over the next 5 years. But sales are only barely climbing by a low double-digit percentage during this weak economy. So, like I said, it's a bit of a mixed bag. That price to sales ratio is pretty high based on that, kind of smaller sales growth. But based on profits, that's where I think that they're going to do much better. I don't really like the stock valuation based on sales, but longer term, I think it's much better based on that future profitability. As far as where Cathie Wood fits into all of this, though, well, she owns this stock across a few of her famous ETFs, especially the flagship ARK Innovation ETF and the ARK Genomic Research ETF, which is basically like her biotech focused ETF. Well, Exact Sciences is not only the sixth largest of the flagship ETF, but it's also the number one absolute largest holding of her biotech ETF. But as much as I love Cathie Wood myself, and I agree with a lot of her kind of long-term vision and long-term decisions, you have to keep in mind that she usually invests in much higher risk tech stocks that are more focused on the very long-term future. And so right now in this weaker economic environment, her ETFs are just not performing very well, with her flagship innovation ETF actually seeing negative performance in the past 5 years, while the biotech one is only up less than 5%. Still, like I said, I really like Cathie and I do appreciate her long-term mindset. And when looking specifically at Exact Sciences, her company has been very bullish on it with much higher price targets than where it's currently trading today. In fact, ARK believes that by 2027, it'll reach $139 a share, which would be an increase of around 70%. And on the bull case for it, they actually think that it could reach as much as $208 per share, which would be an increase of over 150%. So that's pretty good. When talking about the stock, ARK's Director of Life Sciences Research, Simon Burnett, he also had this to say: cancer is a vast, underserved, durable, and secularly growing market that is likely to consolidate. Exact is one of the few companies that has the sales and IT infrastructure to support another multi-year period of growth. Its experienced and trained sales force is an important competitive advantage. And yeah, it makes sense that they would say that, since sales and marketing has been one of Exact's biggest expenses that has really been preventing their profitability. But that that has really kept investors out of the stock could potentially become a greater asset over time as they start to ramp up, just like ARK is saying here. Still, despite all the bullishness, ARK has actually been selling some of the stock recently, because according to SEC filings, they sold around 7 million shares over the past 2 quarters. Now, granted, that's after a giant amount of purchases in all the previous quarters as the stock was falling. So perhaps Cathie was just cashing in some profits on the recent rebounds, as she still holds around 11.4 million shares even after the sales, which, if you know anything about Cathie's ETFs, it's that she is constantly adjusting them. And I believe that she tries to not have more than 10% of an ETF invested in an individual stock. And with Exact Sciences here, it is still at like 12% of the biotech ETF even after the selling. So I'm pretty sure that the stock just rebounded. It climbed by a lot, and Cathie had to sell some shares out to lower the exposure to it. She didn't want to be too heavily exposed to a stock like that. And again, Cathie Wood usually invests in higher risk stocks, so you don't want to be overly exposed to any individual one. That's why her approach of having an ETF with a broad base of very innovative, kind of disruptive companies probably makes more sense to lower the risk a little bit. So the selling is not a big deal to me. This is still the number one holding in that biotech ETF. Clearly, Cathie Wood is still extremely bullish on the stock. And like I said, I'm a big fan of Cathie Wood. I think she's very smart. I like her long-term strategy for innovation. So overall, I think it's still kind of a positive here, knowing that Cathie Wood is so bullish on a stock like this. And just the stock itself, I also think that the stock is very innovative. I like what they're doing with cancer testing. I don't think that's something that will ever go away. If anything, it's going to only ramp up in the future and into other diseases and other things that they can do too. So I do see a lot of potential with this company. I also think that the company could even be a takeover target. Remember, guys, in the biotech sector, we're talking about some very large companies there that are constantly making acquisitions. There's acquisition, you could look up the biotech sector every single day. There are so many acquisitions just happening all the time. So I would not be surprised if this actually ends up being a takeover target in the future by perhaps one of the really big dogs in the biotech space. However, there are still two reasons why I personally just don't really want to be picking up this stock myself. Reason number one, the valuation is still a bit too rich and expensive for me in this kind of very weak macro economy where unprofitable companies tend to not be favored by Wall Street. And I already own a lot of speculative, high risk, and unprofitable companies as it is, that I'm just not really in the market for picking up another one like this. Having said that, I wouldn't necessarily be opposed to it, but the other issue I have, reason number two, is that when it comes to biotechs, at this point, I already own a lot of them. And so I have to really love a biotech kind of speculative stock like this to be willing to pick it up. I gotta love the company and I gotta really believe in their future if I'm gonna be investing in it, because the other thing that I don't necessarily like about it is not only is it unprofitable, but they also don't pay a dividend. Obviously, they're not profitable. And when it comes to biotechs, I own a lot of really big ones that are very profitable and pay some huge dividends. That pay some of the best dividends in my portfolio. For example, I own Pfizer, I own AbbVie, I have Merck, I have Bristol Myers. I mean, I've got a lot of these. So I'm just not looking for a speculative, kind of unprofitable, non-dividend paying biotech at the moment. I'd rather have one of those other stocks. So that's just my personal opinion from my own personal portfolio. It doesn't really fit. But, you know, for Charles, he's probably up a lot on the position. And for anyone else, maybe that they'd want to consider it. But, you know, thinking about how much the stock has already climbed and I'm not in it and I already have similar stocks, I'm just not looking to pick up a stock like this that's already rebounded so much this year. But not a bad stock. I like it. And it's very interesting for sure. Anyway, what do you guys think about this stock? Let me know down in the comment section, and what other stocks would you like me to review in the future? Let me know that as well. But I hope you enjoyed the video. I hope you're all doing well, my friends, and I will catch you in the next one. Take care, everybody. Bye-bye.